This is a silver chart on a daily basis, and right now silver's fixing to close just a little bit below 33. It had some very good gains today, almost up $1, almost a 3% move. And yes, I mentioned I was in on a double short position, mainly on silver and somewhat double short on gold, but mainly silver. Actually, I would say right truthfully for today, I'm actually so much long on some other commodities, like double long on oil. I'm long on copper, agriculture, palladium, and actually the net position for today was actually up a little bit because actually what I'm doing is a protective short on silver. Now today was just kind of a stupid move, but I'm just holding it. I've been holding this for the last couple weeks, and I still think silver's got possibly a move downward. And as usual, what I normally always suspect is like they try to draw the longs in there, and actually there's been some announcements today, but I think it was the Federal Reserve Chairman in Texas that said there's no QE coming. So, as long as there's no QE coming, silver's not going to really take off. And, if you look back here at this time, at the end of February when silver really took off, it was February 27th, they were expecting Bernanke to announce QE the next day, and when he didn't announce it, it went down. Now, everybody blames Bernanke, he did this, did that. They expected him to announce something. Well, it was the market. The market expected him to say something, and he didn't say it. It went down. Whatever. I mean, actually, you start thinking about it. If he says we're going to go on a gold standard, we're not going to go QE, well, what the hell would happen in the price of the metals? I'm not sure, But they probably would go up because there isn't enough metals out there to pay for everything, actually, in reality. But anyway, when I'm looking at this right here, if you notice way back here in, say, December 1st, we had, prior to that time, silver was dipping down to like $30, and then all of a sudden it went up to like $33.75, and people are thinking, oh, it's on the way up. And then look what happened, kablooey, right? It went down to toast, right, for a while. I mean, I'm not knocking it. I mean, but you see what I mean. The expectations, like if you move this chart over, I can move it over, you're looking at the expectations, hey, it's going back up, it's going back up. We had this one crash, they did all these margin hikes, it's going back up, it's got to this resistance point, and now it's going to go up to 40, it's going to go up to 100, and you're following along and wham, it gets knocked down. It's knocked all the way down to 26 something, right? So, I mean, it's, Vision 2020 when you're looking backwards, right? So, I mean, I still think this can drop, so I'm holding this position, but I don't know how much it's going to give me net, but you know what's going to happen? I'll just sell that piece off if it's got a gain. That's the whole game. It's like a protective short. I'm not actually short on everything, and obviously I'm not selling physical metals or anything like that. I think I'd have at least 3 digits on them before I sell anything. That's the way I'm looking at it. Now this is the oil chart. Now, technically, a lot of people say the flag was broke the other day because it went down as far. It went down to like 102 or 103, whatever the hell it was. And I'm kind of looking at that, and I was thinking to myself, and I don't want to knock the technicals. I just think the problem is when people get too technical and it's almost like anything that's mathematical. There's the mathematics in nature everywhere. One technical guy I like to watch is Endless Mountain because he gives a very good overview, and I believe a lot in the exponential Fibonacci because Fibonacci works throughout nature, and exponential is really how the percentages of the markets are moving. He's got very good information. And I think the technicals do work. It's just the problem is that sometimes people are so technical, it's almost like you need an organization to make something work. You need planning. But if the whole thing is all planning and organization, then you don't get nothing done. It's like you could be too technical, and you're looking at tree bark, and you're not looking at the forest. Sometimes that's why people screw up with these charts. But I think the one obvious fact that's sitting out there with oil is that there could be an attack or any kind of event in the Middle East that could drive the price of oil up $10 like nothing. And you don't know when that's going to happen. And I mentioned I like holding UCO, the double leverage. The triple leverage I don't like too much because it's good for a day. It's It's good for a day or two if you know what's going to happen, or maybe just jump in there intraday. But if you're going to hold it for a while, and I'm not talking like years, obviously, I'm talking about for maybe a few months or a couple weeks or whatever, it doesn't erode that bad. So if you think it's going to do this unexpected move upward, it's good to get in there and hold. And when it gets to gain, get rid of this stuff, and maybe it'll go up higher. But if you made a nice gain on it, you made a nice gain. That's the way I look at it. So today it kind of rebounded, and a lot of people looking at the oil charts were kind of thinking, oh, it's going down because they're announcing, they're letting things out of the strategic reserve, so maybe it's going to go down to 100 or 101, stay out of it, and here it popped back up. I just stayed in it because the way I figure is one day something's going to happen in the Middle East. This damn thing's going to go off, and I'm going to sell the junk then. And double leverage doesn't erode that fast, like I was saying. I also want to point out the global manufacturing index came out today. It's down slightly. It's still showing good. It's not down that bad. It went down to 51.1, just like right up here. If you look up here, this is 51.2 from last month, 51.3 from the month before. Basically, as long as it's well above 50, well, actually, it's got to be a little bit above 50. You consider positive growth. This is still considered positive growth. Now, I'm a little suspect of the numbers, but the numbers still look good for the markets. The reason I'm suspect because they had preliminary numbers that came out for France and Germany that were like 48, and they also had something coming out from China that looked bad too. It was below 50. I forgot what it was, but it was below 50. So I don't know how the hell they came up with this global thing of 51.1. Probably the U.S. is probably real high. I kind of wonder if that's really accurate, but that's what they're showing, right? That's what they're showing. So it's not bad news for the markets. The only bad news for the markets for the metals is that they said no QE. That came from the chair, the Federal Reserve head out of Texas that said that. Looking at the Baltic Dry Index, it's still going up a little bit, but the thing is it's still way down. That means there's a lot of industry that's pretty slow in the world. And actually at February 2nd or February 3rd, this was like the lowest point in over 2 decades. So that was pretty bad, but still, it's I don't trust these numbers, but they do affect the markets. I think something's coming up though pretty soon with the metals. They're probably going to slam them down again one more time. It's just, I don't know. If it happens, I'm getting out of my short position. I'll sell it off then. I want to point out something else about QE and some common sense. This is a chart on cotton. This goes all the way back to 2003. So back in 2007, this thing was going up to about 90, right? 90. Then you had the financial crisis. So down in 2009, it was down to like 30-something, right? Really crashed, right? Now, what happened when he announced QE? It went from like below 40 all the way up to over 220, and then it crashed again. Now, I want to point out that's really what happened to every commodity out there. I mean, some moved better than others, but, look at cotton. Cotton moved a lot, too. There's probably some type of manipulation going in this market, but, there's a lot of focus in on the silver market is like totally rigged. It's not totally rigged. It's, QE will have a major effect on the market. And, what can I say? I mean, it has a major effect on cotton. Now, this also implies something else because a lot of people, now, I don't know nothing about farming, but if I did, God, I think that would be one of the most lucrative trades coming up in the future, as Jim Rogers alludes to, because there's going to be, as commodities go up, one of the things, especially energy, goes up. One of the things that's going to go up a lot along with it is food and agriculture products. So, but the thing is, unlike metals, which have to be mined and take, and you don't own a mine, you're actually just buying them. You could actually produce food and sell it, and could be very lucrative if you're a person that knows that type of stuff. Because look what happened to say some of the price of this is the price of cotton, but things like this happen to corn and wheat and everything like that. So it's kind of weird that the things are going to probably go full circle. That the farmers are probably going to do very well. This is something that Jim Rogers says, and I agree with that guy. I think he's 110% correct. food prices are going to go up a hell of a lot. Now, Lindsey Williams says that too, but you could see why, because the same reasons that are going to be bullish for silver are going to be bullish for food. Now, I know a lot of people that are, say, in the Midwest or know a lot about agriculture. They would actually be smart to get into this type of stuff, and it's probably going to pay some pretty good money where it actually regenerates money versus just holding on to something, because it's kind of crazy. That's one of the most maligned fields out there. You know, it's almost like, you know, everybody wants to have a little title and be a little thing with this and that and all this sparkle garbage. You know, and they look at the people that farmed or agriculture, they look down upon it. Generally, that's what a lot of people, especially, you know, from the cities, they kind of look down upon that. And actually, what's going to probably go full circle, because you start thinking about what commodities are going to go up the most. Probably food is going to be included, like just like this cotton, along with silver, along with gold, except it's a renewable commodity. And people are not thinking that clearly about that sometimes, I think. But anyway, I think that I also want to say one other thing about the type of coins. And I think the 4/9 coins are probably going to be worth the most in the future, the Canadian maples. And the reason I say that is because if you look at the premium on colloidal silver 4/9 wire 10 gauge, it's almost twice spot. So why wouldn't a maple leaf command a lot more money